On March 10th, 2023, the 16th largest bank in history collapsed.
A rough week for the banking industry.
The collapse of Silicon Valley Bank. The second biggest bank collapse in U.S. history.
The collapse of Silicon Valley Bank sent damaging shockwaves across all aspects of the tech and life sciences industry. Why? Well, because Silicon Valley Bank specialized in high-growth startups. They solved problems that other lenders would not dare to touch. It was the perfect place of stability for those high-risk health tech startups. The UK, along with the rest of the world, were facing an existential threat to its tech sector.
This weekend, we've had over 100 CEOs of tech firms in the UK writing to the Chancellor saying that they believe this collapse represents an existential threat to the tech sector and could set back really the industry by 20 years.
So what was the solution? Here's how the UK and the current Prime Minister Rishi Sunak responded.
And when the moment came, it was this government that acted to rescue Silicon Valley Bank. So today I'm proud to announce the launch of HSBC Innovation Banking, the most significant global tech bank, combined with HSBC's firepower and headquartered here in the UK.
From the ashes, HSBC Innovation Banking was born.
Perfect.
Today I'm joined with Dominick Kennerson, the Senior Vice President of the HealthTech Division at HSBC Innovation Banking, or formerly known as Silicon Valley Bank UK. We discussed the future of healthcare and the role of technology, the implications of the collapse of Silicon Valley Bank, and HSBC Innovation's mission to be a central hub for the innovation economy. Dominick also breaks down the concept of venture debt and offers his insight into the current health tech investment landscape. I begin this episode by asking Dominick to reflect on his experiences over the last 20 years and provide some insights into what he is most excited for in healthcare's future. Please make sure you subscribe, leave a comment on iTunes, and I hope you enjoy.
The biggest opportunity forward is for healthcare to be more intuitive and intuitive to the point where people don't necessarily think of it as their healthcare or something that's impacting their health. One of those principles, all healthcare is local. So unlocking that really means that there are social determinants of health. There are always environmental factors to your health and healthcare. Those environmental factors probably have more impact on you, and there's a lot of science on this, than your actual genetics. I had my mom visit London a few weeks ago, and she's walking around with her Fitbit. And it's not something she thinks about. It's just part of her life now. There are these companies that use something called just-in-time adapted intervention, or GTI. And the way it works on this principle of it's on your mobile device and you put in your health goals. And then as you go throughout your normal life and day, it gives you updates and it gives you prompts. So for example, if I'm managing my blood glucose level, if I walk into a restaurant for lunch, I get a prompt that says, "Oh, hey, Dominick, it looks like you're at your favorite Thai restaurant. These are the things on the menu that will keep your blood glucose in a certain range." If I leave the restaurant and I start walking home or start traveling home, I may get a prompt that says, "Oh, hey, Dominick, it looks like you're heading home. You haven't hit your step count today. If you take this route, you'll hit your step count." And so I think for healthcare to just be more intuitive, I'm speaking a little bit from a consumer perspective, but I think there are also provider perspectives as well that kind of fit that mold for just intuitive, seamless experiences. And so when we talk about the last 20 years, that seamless experience we've all experienced is through our iDevice, right? Or through our smartphones. And everyone in healthcare is still trying to get to that level of feel, look, experience to a degree, and quality, right? So there's also a quality aspect connected to it. That to me is the greatest opportunity for the next 20 years.
And so Dominick, you now serve as the Senior Vice President of the HealthTech Division of HSBC Innovation. So before we talk about your role, I wanted to touch a little bit on HSBC Innovation and what are the unique goals and vision of this arm of HSBC?
HSBC Innovation Banking, of course, the bank was born out of Silicon Valley Bank. And I think what I believe is that aim is to really be the destination for innovation banking and for the innovation economy. What that means in a healthcare sense and in a healthcare perspective is it's a bank. And I think that aspect is sometimes lost. At the end of the day, in a very highly simplified version, is deposits, loans, and value add. I know these sound like maybe rudimentary topics, but when you get into the nuances of those three pillars, so to say, or those three buckets, these are the service opportunities and the pipes that actually power and empower the venture-backed companies and the innovation economy. For example, when it comes to deposits, I have clients, once they get a big raise, they will the very savvy ones, they will park their money in a high deposit interest account, and they can literally pay salaries on interest alone, which when I wasn't inside of a bank, I didn't necessarily think about that. And I didn't really understand how the importance of something as simple as opening up a deposit account and having really good treasury management. And so, for example, I've seen other companies on the other side of the spectrum. Let's say the company, for example, is based here in London. They raised their $10 million from US investors. Those investors send the money to London. So they've lost maybe 15 to 20% on that transaction. So that $10 million is now 8 million pounds. But the company wanted to do business in the US. So they're going to lose money again when they send that money back to the US. And when they pay salaries in the US, it would have been a lot easier if they had a US dollar account. So to have the success of a raise like that and then to lose 20% of it with just one click and in one transaction can dramatically change a venture-backed business or a business going from C to Series A or Series A to B and B to C. And these are nuances I've seen even CFOs that have worked for dozens of years. I've seen them make mistakes like that. On the value add side, I think this to me is always an area where, given my background and experience, I can lend a lot to a CEO or a CFO. And I've had CEOs ask me for strategic insights. I've had CEOs ask me for market trends. The unique thing about a bank is that we are consistently in contact with the market in a dynamic way. So HSBC Innovation Banking, we also have a team for investor coverage, for example, that's always talking to VCs. We also have our own venture capital relationships as relationship managers. And so these connections are always giving us insights and intelligence. And to a degree, in an innovation economy, information is often like a currency.
Many people will probably be aware of the collapse of Silicon Valley Bank, but not so many people would be aware that HSBC Innovation Banking is this new global specialized proposition for tech businesses that combine the expertise of the former Silicon Valley Bank. And so could you talk about this transition? Just the reason I ask is because Silicon Valley Bank had previously been known for stability and support for tech startups, whether it was during 2008, the financial crash, or the dot-com bubble. And so its collapse was worrying for a lot of tech innovators and entrepreneurs. And so the question I'm getting at is, what does HSBC Innovation taking over Silicon Valley Bank mean for the future of health tech and more broadly the tech industry?
So here in the United Kingdom, Silicon Valley Bank UK was purchased by HSBC in March 2023. So they're still an existing kind of entity in the US. So it was also announced earlier this year that we hired a number of bankers in the US to form HSBC Innovation Banking in the US. So this transatlantic footprint between US, Europe, and Nordics, and also what you'll see in a lot of the...
It's Hong Kong and Israel, right?
Exactly where I was going. Oh, you've done your research.
Yeah.
And so I think when it comes to safety and security, I think where we are now from a global banking perspective is in a completely different lane. For example, HSBC on balance sheet has something like over 3 trillion pounds in assets and 1.7 trillion pounds typically in cash. And so what that means, just to put it in perspective, this is 1.7 trillion is larger than the GDP of Brazil. I think and even the GDP, I think, of Argentina is, 800 billion, something like that. We're talking a completely different level of economics and a completely different level of opportunity. And being active in 62 different countries as a global HSBC allows us to capture and to really service a larger share of that innovation economy. I think from a health tech perspective, this transatlantic position is hugely important because the largest, so to say, health tech market is the US. So a number of companies in Europe, in the United Kingdom, in the Nordics, Israel, even in Hong Kong, typically want to do business in the United States. And so given, I think, my professional footprint for US globally, and also having lived in Germany and Berlin, and now living in London, it's perfectly situated to help companies move along that scalable pathway. And to your question around the transition, I think it's been quite dynamic. And what we've done over the last 6 months, or since March 2023 to now, October 2023, this kind of a transition typically takes 18 months, almost 2 years. So what I really like about the people that I work with is we have, even as a global bank and as bankers, so to say, we have the same entrepreneurial spirit that our companies do and that our clients do. And that's what really makes us different, and that's what sets us apart.
As the Senior Vice President of the HealthTech division, what does your role encompass and how are you aiding on this mission for, I guess, this global healthcare innovation expansion?
I have a really dynamic client portfolio. The majority of my clients they've raised at least a Series A. So they've raised at least $8 to $10 million, euros or pounds. And those clients, they are in a number of disease and condition areas. They operate in a number of geographies. If I think about just my conversations this week, I've had conversations with a very large home care client, with a number of fertility clients. I've had conversations with different kind of health and wellness platforms, with men's health platform, with a kind of virtual surgery kind of a platform. So my role essentially is first to really be present for the clients, whatever they need. And again, it's a little bit those three buckets: the deposits, the loans, and the value add. And the deposits I've talked about, that loan bucket is really often around venture debt and venture debt kind of solutions, which is a really unique value proposition in the marketplace.
Maybe break down venture debt for those who aren't familiar with the term.
A lot of investors, when they start their company, and I have also seen this in my LinkedIn this week, at least 1, 2, 3 times a week, I'll have a founder come to me and I'll get a random LinkedIn message that says, "Hey, Dominick, I'm raising a seed round of $1 million. Can you invest in my company?" And I typically chuckle a bit, and only because I think there's not a lot of context in terms of how the bank provides money. And so sometimes founders think, oh, I'm raising a round, a bank will also raise with me. But what we provide, and when I say venture debt is essentially a loan. And that loan, the way we work to de-risk the loan as a bank is there are certain elements that have to be in place. And one of those elements that has to be in place is cash. It's not typical for a bank to loan money if you're not generating cash or if you don't already have cash. So if a company raises 10 million, they have different expansion plans. They maybe want to plan for profitability or they want to plan for growth. They may say, I could really use another 2 million to have as working capital or to support this one initiative we have. And this 2 million is great. Would be great if I could get it in the form of debt, because I won't dilute the business. And that means that I don't necessarily have to add new investors to get that money, which means if I'm the founder and if I have less investors with more money, that means I probably have the same piece of the pie or a larger piece of the company ownership. So that if there is a liquidity event or an exit event on the company, then maybe that's a lucrative opportunity for me. And it's not just me, right? As the founder, it's also for my investors. So venture debt can often be that kind of a solution. The other thing that's nice about a venture debt solution is that it can add to a runway. For example, this company that just raised 10 million, let's say that 10 million extends their cash position by 18 months. They're in business, they know, for 18 months. But they know if they had another 2 million, they could maybe invest that, or we talked about some of the deposit solutions. Like maybe there's some creative things they can do with that to extend their runway to 24 months, theoretically. So these cycles are important because the majority of companies, when they raise, it's going to be raising for about an 18-month runway. You're quite fortunate if it's above 18 months. And actually, there was a good market report out after Q1 this year from the team at Galen Growth. And there was a statistic on there from their global health report that talked about the majority of companies in Europe. I think it was nearly 60% of the companies in Europe, health tech companies, had not raised in the last 18 months. And so for me, that data point was quite interesting. And I think really started to paint a picture in terms of what kind of solutions clients may need. For example, something that even HSBC Innovation Banking was talking about through our thought leadership was cash management is very important in 2023 because investors aren't writing checks at the same clip that they were in the pandemic in 2020 to a year ago in 2022. So that's maybe the long answer to what is venture debt. And it is a bit nuanced because it's really not a one size fits all solution. It is a bit nuanced depending on the client, depending on kind of the subsector, depending on their geography, depending on who's on the cap table, depending on future cash flows, depending on risk. And at the end of the day, it's all about finding ways to de-risk.
And this next question, the reason I ask it is because my best friend from when I was little, he works as an investment banker at Goldman Sachs. And we have this discussion a lot around the moral implications, merging a finance role, which is stereotypically looking at the best ways to make money for someone else or yourself, with a healthcare role, which is obviously looking after people with little to no financial gain. So what is your perspective on that?
Good question. I've worked in healthcare my entire career, and the way I think about it is like this. I think about healthcare as one of those things that humanity has dealt with since the beginning, whenever that was. And thousands of years ago, if cultures had a medicine person, a medicine man or a medicine woman, so to say, and even through that lens, there was always an exchange of value. You had to bring a goat, you had to bring some herbs, you had to bring some spices, you had to bring something to the medicine person for that person to provide their value. One of my first in-depth hospital experiences was in Washington, D.C., in what people would call an indigent medical facility, so a high Medicare, Medicaid population. It was the kind of hospital where homeless people would sometimes try to come into the hospital just to take a bath or to wash up in a sink or something like that. And I did process, I think, a lot of that early in my career, and that's where I landed. I think that there are different levers, and there has always been this social model to healthcare. And I also believe that healthcare works because all healthcare is local. Healthcare has sovereignty principles ingrained into it. Healthcare sovereignty is, to a degree, the reason why the United States is valued as the largest healthcare market in the world, because people do have a different kind of insurance, and this insurance pays for different things, and medicines cost something different in the States than they do in Germany or in the United Kingdom. And so I think that sovereignty, it's inherent to the models that we have now. But I think there will always be an exchange of value, and I think there always should be, whatever that value is.
Interesting. And as someone that has experienced and witnessed the different healthcare systems globally, whether it is in the US or Germany or the UK, what is your outlook on a successful healthcare system?
I'm the kind of person, I'm definitely an idealist in a lot of ways. I also think that something like healthcare and something like health, when we talk about social determinants of health, we are really talking about culture. And this cultural element, what works in Germany, it's really, and we see this in venture-backed companies. So a venture-backed company in the UK, they try to go to Germany and have a really tough time. Or we see a UK company sometimes try to go to the US, and sometimes they really are challenged out of the gate because the cultures are quite different and because they are quite challenging. I think because of that, I think existing systems are the way they are for historic reasons. The US healthcare system is the way it is because employers started offering it, I think, somewhere around the Industrial Revolution. The one thing I do believe, if I were to invent a health system, and one of the challenges I think with the US is, and I didn't know we were going to be so philosophical today, I don't think anyone should go bankrupt due to their healthcare. For example, the number one cause of bankruptcy in the US, it's often related to healthcare. I think 40% of bankruptcies in the US are healthcare related. And to me, that's one of those things that I don't particularly understand as a human. I do think that sometimes people that interact with the healthcare system, they don't know what they don't know. So they don't know that they can maybe go to the hospital if they received a $100,000 medical bill, that there are ways that the hospital may be able to absorb that as uncompensated care. And so I think there are advocates in the States that do some of that now, that even do care navigation, that even try to find different ways for people, patients, to move through systems in a less costly way. I think what I've heard future casters say, so even this quantum physicist, I'm probably going to butcher his name, but Michio Kaku, definitely butchered his name. But he talks about really the future of healthcare being in your home. And that's been a conversation for at least the last 15, 20 years, because for most of the Western world, right, we're all trying to figure out the aging equation and the demographics post World War II were, okay, baby boomers, all of those baby boomers are now, 70, 80. They're at that most expensive time, healthcare time in their life. Those people don't want to go to a hospital or an end of life facility. They want to be in their home, and they want to they want to experience care in a different way than the generation before them. And I think that's the role of culture again, right? I think home care is a big piece of it. I think having digital inside of your home to a degree is also a part of it.
And as we close the podcast, are there any words of wisdom, Dominic, that you can give those wishing to have a similar positive impact in driving healthcare through innovation?
Words of wisdom. I think the challenge with healthcare is sometimes the status quo. I think I've sometimes very subtly always tried to challenge the status quo a bit. And I think part of that was given to me in part because of my early career experiences. I've had the most amazing bosses in the world, so to say. So I mentioned Steve Case earlier. When I worked in the hospital, there was Joan Phillips, the CEO of Greater Southeast Community Hospital. My mentors are experts in what they do in healthcare, and they've done very different dynamic things. And so I think with those examples, being able to challenge, being able to have really good mentors, and just being able to ask, I think Albert Einstein said something along the lines of, if you can't explain it to a child, then you don't understand it. And I think sometimes in healthcare, we try to overcomplicate things. So to be able to say it quite plainly, and when digital in health becomes that intuitive to where if it's the mom definition, then I think maybe we've arrived.
Dominic, it's been my pleasure having you on the podcast, and thank you so much for joining me. I've really enjoyed this conversation.
Likewise, thanks for the invite, Ash.